Okay, good morning, ladies and gentlemen. We still have a couple people signing on, but I'm going to go ahead and get started. My name is John Randall. I'm a regional director for GoldenCare USA. I want to thank everybody for taking time out of their day today and joining us on this webinar. If you haven't ever been to our website, you should make sure you check it out. It's goldencareagent.com. Look at all these great tools we have to offer besides the best back office support. We really do have a lot of tools. We have a new instant pivot presentation that'll be ready next week. We have new products coming out very shortly here. We have a lot to offer, and I think you'll really be impressed if you come and join us. So give us a call at 800-842-7799. Today we're going to talk about GTL short-term home health care plan. If you haven't worked with GTL, they're a great little company. But what you really need to notice in the marketplace right now is how it's really shifting. The long-term care industry, while it's a great product and it's a thing that everybody needs, we're finding out it's, a little tougher to get. It takes longer application. The underwriting is a lot tougher. So you're going to see short-term care come in and not replace the long-term care, because long-term care is very vital to our industry. But it's going to offer more coverage to more of your clients, more affordable with less stringent underwriting. So I think you're going to see short-term care really make a surge this year. It's been coming on, and this year I think is the year it's going to explode. And one of the greatest little tools we have is GTL Standalone Home Health Care Plan. It's perfect to have in your portfolio because it's really easy to qualify for. It goes along great with other products or as standalone for a product that they can only get because of health or wealth. But that's why we wanted to introduce it again if you haven't seen it. It's nearly guaranteed issue. It's real flexible, and I'll show you that with some pricing later on. Again, it's another must-have for your senior portfolio. Today, I'll talk a little bit about the carrier, where the product niche is, the pricing of it. But GTL's been around for a long time. They're over 85 years old. We've worked with them a long time ourselves, and you can see they really have a nice little operation there. 256 in net or million in net premium, and the best part is they've moved up to an A- in 2021, which is really tough for a company that doesn't have that standalone life block. So that shows you what the insurers think of them. They're really strong that way. But that's really nice that they moved up, because a lot of people's E&O blocked it. We don't have to worry about that anymore. And an A- rating is super strong for me and best. And if you don't know GTL, they have a lot of great products. They have a new cancer plan that's been introduced last year that's taken the industry by storm. If you do the Advantage products, these Hospital Indemnity, second to none. Next Thursday, or this coming Thursday, I'm going to be going over Critical Cash. If you haven't looked at it for a while, it's an awesome plan. Their short-term recover care really made some nice changes to that. That's a nice little product. But today we're just going to talk about the standalone home health care plan. Its issue age is 61 to 85. It can pay up to $450 a day for 360 days. Excuse me. And don't forget, it has restoration of benefits built into it. So that 360 could actually be out as many times as you want. You can use it over and over as long as you keep recovering. And I'll go over that. The benefits are paid regardless of any other insurance. Look at how easy the questions are. You can't be in an assisted living or nursing home or receiving home health care. You have to be able to perform your activities of daily living. You can't be treated for Alzheimer's or dementia. And you can't expect to have to need any care in the next 60 days. And that's only if you take option C, which I'll show you the options here in a little bit. But you can get up to $120 a day for 60 days for a home health care aid. No prior hospital stay required with this plan. It has a built-in prescription drug benefit that you can actually receive $600 a year. And when we take that off the premium, it is a super affordable plan. Very affordable without the prescription drug, but super affordable with, again, built-in restoration of benefits. Does have some really nice riders on there, hospitalization, critical illness, dental, vision. To trigger the plan, it's just 2 out of 6 ADLs that you can't perform. So bathing, continence, dressing, eating, toileting, and transferring, or hands-by or stand-by assistant with cognitive impairment also. The difference between this and long-term care is there's no 90-day expectation, meaning with long-term care, when you have something happen to you, they expect it that it's going to last at least 90 days or longer. This doesn't have that, and most of the short-term cares don't. And what makes that really important is if you take somebody like my mother who had a back surgery at 85, even after her stay in the rehab, which nowadays has almost always been assisted in a nursing home, she got home and still had trouble bathing and dressing. Now, it wasn't for very long, maybe 3 to 4 weeks, but she would have qualified and she would have got that care to have somebody come in. And guess what? Then she would have recovered and that plan would have restored itself. Same thing when she actually had a knee that had some kind of problems with her knee replacement, and the same thing happened. Even though she was getting her physical therapy, she still needed help dressing and bathing, and those are the two most common. But that was something she would have collected on again, and again it would have been about 3 to 4 weeks, so a short claim. But you know what? Her other insurance was paying anyway. This would have paid either way. So that 90-day exception is really huge, especially when you talk about the older people falling and maybe dislocating a hip or breaking a hip. They almost always recover, depending on their age, of course, but a lot of times it lays them up for 4 or 5 months. So basically we have a plan A, a plan B, and a plan C. This is for your home health care, skilled care. Plan A, you get $150 a day, plan B, $300, and plan C, $450. The maximum benefit period is 360 days. Again, you do have restoration built into that, so if you do get better, it will recover itself. But it pays for all the major nursing, on LPN and RN, skilled nursing, physical therapist, speech therapist, and it pays you whatever the amount is compared to the plan you have. So if you did have a nurse, a physical therapist, and speech therapist come in all on the same day, you would only collect $450 because that's the maximum you can get for that daily benefit. And you can see that's up to $162,000 max benefits on the big plan. Then it has the home health care aid, and that pays up to 60 days. Plan A is 40, Plan B is 80, and Plan C is 120. So with Plan C, you get another $7,200 in care. Now, it's not a 60-day period, it's 60 days of service. So if you're getting care 2-3 times a week, obviously it's going to last, close to a half a year, your care. And the big part is no prior hospital stay. The RX benefit, and it does say it's not available in Kentucky, but basically every time you get a prescription refilled, if it's a generic, you get $10. If it's a brand name, you get $25. With Plan A, you get up to $300, and B and C, you get up to $600 a year back. And you know what? they're really good at paying that out. And then when I show you the cost of this plan later, if you know people that are on quite a few prescription drugs, it just makes sense for them to get it. There's no reason not to have it. Built-in restoration of benefits, I talked about that twice now. But basically, it refers to the base plan and the home health care aid. All it says is you have to not receive benefits for 180 days, and a licensed healthcare practitioner has to sign off that you did not need care during that time. There's no limit to the number of times you can restore it, and the prescription drug and the other riders actually restore it themselves on a yearly basis. So you do have the possibility for multiple claims. And I'm sure my mom would have still been alive today. She would have found more reasons to collect on this plan, and there was probably some in there I forgot because she was pretty resilient and lived to the age of 95. So she would have probably collected on it. They just didn't offer this plan in Minnesota. That's why she didn't have one. The optional riders, basically this one's pretty nice. It's accident and sickness hospitalization rider. You can get 100 up to 300 a day for 3 to 6 days. And what they count as a day as long as you're there for 24 hours. It restores itself after 60 days. But the best part is there's no more underwriting. The underwriting's just what's in the original plan. So what a great way to add on to your other insurances and collect a little more money. Again, 100 to 300 a day for 3 to 6 days if you end up in a hospital. The critical accident rider, we all know people who are prone to falls, hip dislocations, things like that. Again, no extra underwriting on this. And it doesn't restore the max benefits, so it's a one-time payout on the maximum benefits for each one. But you can collect some nice little chunks of money here, and most of the time, this plan is pretty cheap. So adding it doesn't add that much extra cost to it. The ambulance rider will give you up to $200 per trip and up to 4 times a year. There's no hospital requirement for that if you need to take an ambulance. Again, this pays on top of anything else, your Medicare, your health insurance, anything else that's paying for it. It does have a lifetime maximum of $2,500, and there is no restoration on that. The return of premium rider, they added this afterwards, but it just says it'll return all premiums less any claims paid if death happens before the age of 86. So it's fairly cheap to add this on there, from 10 to 25%, depending on age. But really, in most cases, it's pretty cheap to add it on there. And it is get a little bit of that worry if you use it or lose it mentality. But the dental vision rider is pretty nice. It gives you either 400, 800, or 1,200 a year. It does have deductibles and co-pays. The dental plan makes you wait a certain amount, like 12 months before you can get a bridge or a crown. And that just makes sense for the company. They don't want somebody to buy this plan, get a $1,200 benefit off their $700 premium, and then drop the plan right away. So that's the only reason they have the weights in there. But pretty nice little dental plan. No extra underwriting. It's just part of the plan, and it does restore annually. Same with the vision rider. It restores annually. They'll give you one exam. A lot of times you can get that with your regular health insurance too, but it does help on the cost of contact lenses or eyeglasses or the hearing aids from the slide before. Right now it's approved in 35 states plus Washington, D.C. We're hoping to have more approvals coming soon, but it's again, in a majority of the states, there's some states, Minnesota, Florida, California, New York, Connecticut, it's really tough to get these short-term care plans in there. So we don't know if they'll be part of it anytime or anytime soon. But hopefully we can sneak in some more. The rates, very simple, easy worksheet to work out. I will show you that in a little bit, but first I'm just going to give you an example of how you can make it a very affordable plan or a very robust plan. So I'm using a female age 61. I'm giving her the small plan with no extra riders, so she gets up to $150 a day for base, $54,000 maximum, $40 for a home health care aid, up to another $2,400, and she does get $300 a year off on that plan if she's taking it, plus the restoration of benefits. Now for that same one, we can add a lot of the riders, do the plan C instead of the plan A, and we're coming up to $148 one. So for one, $253 a year, all the way up to $1,776 a year. And you know what? If this person was actually on enough medications, they would get $300 back on the RX benefit. But look at the premium was only $253. So you can really make this plan affordable all the way down to almost no cost, depending on what kind of medications somebody's at. But you can also build it up to be a nice little plan that's still very affordable. Don't forget, they're going to get up to $600 back on their prescription drugs, if they were taking enough of it, which would make that $1,700 plan actually an $1,100 plan. So very nice. What if we match it up with another product? On Thursday, I'm going to be going through the critical cash. So let's just say we do a critical cash plan for this female age 61. It's $130.81 a month. You get a $24,000 lump sum diagnosis, $2,500 additional if you had to go to a assisted living, and $5,000 additional if you had to go to a nursing home. It's a 24-month coverage. Full benefit pool is $432,000, and it covers things like cancer, stroke, Alzheimer's, heart attack, can't even say the word, so I'm not good, and other things also. But you know what? That's a nice little plan. Now what if we throw a short-term care plan on it, do the basics, add a few extra riders. This is plan B, or plan C, because up to $450 a day. But that's going to go along with this other plan if you trigger both of them. This one's triggered on diagnosis. This one's triggered on 2 out of 6 ADLs. But this one also has a couple extra riders. And look at that, for $184 a month, you have some really nice protection between the two plans. And here's what I know it's kind of a small screen there, but this shows you how you can do the rates. Basically, for a 61 to 64-year-old, the base plan is $19.42. The big plan is $43.44 a month. You do have to add $1.67 to the monthly, or $25 a year for the annual plan. But you can see that, you know what, this plan's very affordable all the way, even for the higher ages, all the way up to 85. You can get them a plan for $55 a month. And you know what, there's not a lot of plans out there that would cover somebody 85. But you have the ability to do it. Now, one thing you do have to remember, it is age banded, so every time they move up an age band, they go to this higher price. Most of the plans don't do that. The short-term home health care plans only out there, they all do that. So, but again, I just wanted to go over that real quick. I stuck to my 20 minutes almost. Again, feel free to give us a call here at 800-842-7799 or go to GoldenCareAgent.com. Check out our perfect portfolio. Check out all the other tools we have, the CSG actuarial. We have access to Medicare Center if you're in the Medicare field. It actually records all your calls and keeps you all compliant. We have Stratecision to compare the long-term care companies, short-term care companies, and the hybrid companies. But we really have everything for you right here. So I want to thank everybody for taking time out of their day. If you do have any questions on this, we'd be glad to answer them. But everybody have a wonderful day. Enjoy the exit of the week, and hopefully you can join us Thursday for the Critical Cash presentation. Take care and have a great one.
Check out our website, GoldenCareAgent.com, or give us a call at 800-842-7799.